What's driving the unprecedented surge in California home sales? Join us as we uncover the latest trends.
Absolutely. We have experts like Jason Walter analyzing why 75% of California is buzzing with activity despite economic challenges.
What can we expect as we head into 2024?
Stay tuned as we dive deep into California home prices, trends, and challenges buyers will face.
We're proud to be financial insights in minutes, delivering the top insights you need without the fluff.
Great to have you with us. Our expert guest insights are ensuring you won't miss vital details.
Exactly. Each expert brings unique perspectives on the ongoing changes to the market.
So let's decode California's housing strategy. This is going to be enlightening.
Time to navigate the waters of an impending global economic collapse. With news pouring in about major economies taking a nosedive, let's find out what Travis and Mitch have to say.
Here's the scoop. We're seeing signs of a looming depression not just in China and Japan, but also in Europe. Strap in as we dissect the details of this precarious situation.
What's the core message emerging from Travis and Mitch's analysis?
They argue that multiple world economies are on the brink of disaster, with China's consumer price index growth at just 6% and Japan slipping into recession, setting the stage for a worldwide economic meltdown.
Let's break down the situation in China. What's happening there?
China is seeing very weak consumer demand, just 6% CPI growth. To make matters worse, producer prices have dropped for almost 2 years now, hinting at severe overcapacity and deflation risks.
Japan's demographic situation seems unstable as well. What can you tell us?
Right. Japan's population is dwindling at a staggering rate, down by 800,000 last year alone, and they now hold the dubious title for the highest debt-to-GDP ratio globally, further complicating recovery efforts.
And Europe? What's the news from there?
Europe faces its own troubles, needing 5% of GDP in new investments to remain competitive. A former ECB president calls for bailouts as potential crises loom larger than the COVID-19 pandemic response.
Now, what do the experts predict moving forward?
Travis warns of a potential global recession leading to a substantial drop in consumer spending and potentially massive rises in unemployment, transforming middle-class life as we know it.
And could we see the debt-to-GDP crisis expand?
Absolutely. If governments don't find substantial ways to manage and reduce their debt-to-GDP ratios, we could be facing dire financial policies that only escalate current economic woes.
As we wind down, what's the key takeaway?
The main point: urgent systemic change is critical to revive these economies. Bailouts are not the long-term solution and can lead to more significant issues if overused. Time to empower the consumers.
What can viewers take away from this analysis?
Absolutely. Stay informed, understand the implications of economic policies, and advocate for responsible financial management.
Ready to dive into the stormy waters of real estate? Today's hot topic: the new commission rules that could sink homebuyers. Joining us today is Simonetta, a seasoned broker and owner at Pier 21 Realty, who brings over 25 years of experience navigating these waters.
Absolutely. These changes are turning the tide for buyers and agents alike. Philip's insights will help us cut through the waves of confusion. Let's get straight to the facts.
So what's the crux of the matter? What's really changed in this landscape?
The core thesis revolves around the new commission rules enforced by the National Association of Realtors. These regulations now require buyers to sign agency contracts before viewing homes, complicating the buying journey. This shift could leave many buyers struggling to understand their options.
Let's break down those key points. What do buyers need to know about these new contracts?
With the new rules, many states now require buyers to sign agency agreements before looking at homes. This may lead to unexpected fees for buyers, which could prevent them from purchasing a home.
And what's the impact on those eager first-time buyers?
They're facing the brunt of these regulations. Increased financial barriers may limit their access to homes, especially devastating in a time when home prices are surging.
What about the response from the National Association of Realtors?
Criticism is mounting. Many agents feel the NAR has sold them out by supporting these rules that complicate the buyer's journey.
Let's look into the crystal ball. What does Philip foresee for the future of homeownership?
One prediction is that with increased barriers, more potential buyers might opt for renting instead of trying to buy. This could drive down long-term homeownership rates significantly.
What about potential reforms? Are change tides on the horizon?
Absolutely. If public outcry continues, this might spur a much-needed reform of the commission rules. Agents and consumers alike are likely to demand fairer practices moving forward.
So as we wrap this up, what's the big takeaway?
The shifts in commission structures underscore an urgent need for transparency and fairness in real estate transactions. Buyers deserve clarity and support, especially in challenging times.
And now we want to hear from you. What changes do you think will be necessary in the future?
Drop your thoughts in the comments below because we'll be diving deeper into these issues moving forward.
Time to navigate the currents of today's discussion. As the real estate market keeps investors on edge, it's essential to dissect the current state of affairs.
Here's the scoop. This video dives into what's going right and wrong in the market and offers actionable insights for investors feeling the heat.
So what's at the core of this turbulent market?
The main thesis underscores that while many investors are panicking due to interest rate hikes, there are also positive developments hinting at adjustments and potential opportunities.
Let's break it down. What's happening with those interest rates?
Experts predict a slight decrease in interest rates, which could significantly reduce borrowing costs. This is good news for both homeowners looking to refinance and investors seeking better financing options.
And how about construction costs? Any relief there?
Absolutely. As construction costs begin to stabilize after previous surges, developers might be encouraged to initiate more projects, potentially leading to an uptick in housing supply.
What does the softening market mean for buyers?
Current trends show that housing prices are stabilizing, creating openings for buyers to negotiate and snag better deals, an excellent opportunity amidst the chaos.
But there's a lot of stress out there. What's causing that?
Many investors are panicked over high interest rates and pressures from variable loans. Staying informed and adapting strategies is vital to navigate these choppy waters.
Let's glance into the future. What predictions are we seeing?
Expect banks to tighten lending, making future deals more challenging. Real estate prices could remain under pressure due to ongoing economic factors. Definitely something for investors to watch closely.
What's in the crystal ball? Increased volatility, huh?
Yes, in the near term, expect significant market fluctuations. Investors need to remain adaptable to navigate this uncertainty effectively.
And what about housing supply?
Should construction slow, we could face significant housing shortages. The result? Rising rents and increased competition among renters. Definitely something to consider.
So to wrap things up, what's the big takeaway?
The key takeaway is that investors need to stay informed and adaptable in this evolving market landscape. Knowledge is power.
As we part ways, what strategies are you thinking of adopting?
Let us know in the comments. Share your thoughts on navigating the challenges ahead.
Time to navigate these currents. Home sales in California are taking a surprising leap. From rising inventory to dipping mortgage rates, the market is buzzing.
Here's the scoop. While 94% of California's counties have more houses for sale, there's been a substantial increase in home sales. It seems the tides are shifting.
What's driving this unexpected surge, and is it sustainable?
The central thesis highlights a unique situation. Inventory is increasing, yet home sales are simultaneously climbing. The dip in mortgage rates is a significant factor here.
Let's dive into those key points. Can you break down the sales figures for us?
Sure. Home sales saw a robust 4.1% increase from last year. Plus, July hit the highest sales level since February. That's quite the comeback.
What about the regional differences we're seeing?
Absolutely. Southern California's sales soared by 11.4%, while the Bay Area outpaced that with a whopping 19.2%. It's a tale of two markets.
And what about prices in this bustling market?
Good question. The median home price climbed to nearly $887,000, a 6.5% increase. Simultaneously, inventory surged impressively by 39.3%.
Looking ahead, what predictions do experts have for the winter months?
Expect price dips as we enter winter. Historically, the market cools down in those months, potentially giving buyers a bit more negotiating power.
To sum it up, what are the critical takeaways?
The California housing market remains complex. With rising sales but increased inventory, it's an exciting time for both buyers and sellers. How will these dynamics evolve? Stay tuned.
As we close, we want to hear your thoughts. How do you see these market shifts impacting homebuyers?
Share your opinions in the comments below. The market is full of possibilities.
Let's dive right into a unique property analysis. Would you buy this duplex rental? Our expert, Dave Meyer from Bigger Pockets, is breaking down the potential of this investment.
Absolutely. Dave walks us through his personal investing strategy, providing insights that can help you make informed decisions in your own real estate journey. So, what are the specifics of this off-market deal?
What's the core thesis here? Dave is analyzing an off-market duplex deal, weighing its potential despite some uncertainties.
Right. He's using a combination of cash flow and appreciation potential as a guideline, but facing challenges with the deal's location and the quality of renovations.
Let's get into Dave's overall investment strategy. What can you share on his experience?
Dave's been investing for 15 years. He focuses on long-term rentals, but also dabbles in private lending and multifamily properties, ensuring he's well-versed in various market conditions.
Now let's talk specifics about the duplex. What makes it stand out?
It features 3 bedrooms per unit and is currently priced at $325,000. At a projected rent of $3,600, this meets the 1% rule, which is quite promising.
Interesting renovation angles here. What should investors consider?
Great question. While it's fully renovated, Dave raises concerns over the seller's motivations. If they're dissolving their business relationship, are they skimping on quality during renovations?
Now that cash flow and appreciation sound vital, how does Dave frame this discussion?
He introduces a spectrum that balances both metrics, showing where most deals fall. It's about finding that sweet spot where cash flow meets appreciation potential. Quite insightful.
Finally, what's the plan for negotiating this deal?
Dave intends to offer a lower price by 10% to increase his cash-on-cash return and secure more equity. Smart move to boost his investment's potential.
What does Dave foresee in terms of market trends?
He believes targeting higher cash flow properties now could yield significant returns as rental prices increase in the future. Sounds promising.
To wrap things up, what's the key takeaway for investors?
Dave emphasizes balancing cash flow and appreciation in potential deals. Investors need to be strategic and aware of market dynamics to maximize their investments.
So what would you do? Would you move forward with this duplex?
Share your thoughts in the comments. Engaging discussions help us all become better investors.
Thanks for joining us for this in-depth look at the California housing market.
We heard valuable insights from Jason Walter, who highlighted the recent surge in sales driven by demand.
Indeed, Ken McElroy pointed out the implications of rising mortgage rates on buyer strategies.
Philip Simonetta kept us on our toes, explaining how new commission rules could reshape the market for buyers.
And let's not forget Travis's perspective on the sustaining interest from investors in California real estate.
Mitch, however, reminded us that potential economic risks shouldn't be overlooked.
That's right. By understanding these varying viewpoints, we're better equipped to navigate this dynamic landscape.
If you found this discussion enlightening, don't forget to like this video and subscribe for more insights.
You won't want to miss out on our future content. Keep an eye out for more on notable market trends.
Absolutely. Until next time, check out our other videos for even more valuable insights.